Okay, we have a special guest for you today, Ian, don't we?
Yes, we do. I don't think they're ready.
I don't think they're ready for this, man. I mean, we got to like set the mood for this. Our guest is someone who's so special that when this person comes to the channel, life happens. Like
Crowd roars.
right, like I feel like babies are made when this happens.
Babies are made. Yes.
I'm not gonna. So Ian, today I was so in the chat. I want to hear from you. Guess who today's triple host is? Third Migo of the day, if you will, guest host. So I want to hear from you in the chat real quick before we announce this guy. I want to hear in the chat. We're gonna keep the suspense. So Ian, today I was at Platinum Top 50.
I know you were.
I looked over and I see this guy, and I'm like, holy shit! I have to get this guy on the channel. And so I immediately reached out, and this guest was like, I am on tonight. So if you know who this guest is, drop it in the chat. We're going to go. I haven't even seen one guest yet. I mean, Ian, let's define our guest real quick. You give me a little definition of our guest.
Distinct characteristics. I'll say that's one good way. I mean, all of us are though, right? Like all of us that do this. What else? Can I say really tall? Is that a factor?
But I mean, yeah, I guess you could say he's tall, but when he sits down, he's just as tall as the rest of us, you know?
I know. So I'm not really giving any clues away. That's fine.
Yeah. Well, all right. Since nobody's guessing, I'm sure people are still
trying to find out. Why is everybody so quiet? Is it because we're in Nashville?
Imagine, like, I'm still early. People are still trying to realize that that we are actually live right now. So if you don't know who our guest is, we're going to bring him on in a second. But Ian, we got a lot of things to talk about. Our guest is sitting here like, what the hell, guys? Yeah. But we got some stuff to talk about tonight. We're going to talk about Airbnbs, the attack on Airbnbs. There's a few new really cool developments happening, so we'll talk about, and then we're gonna talk about the future of Austin. Like, what do we actually see happening in the future of Austin? So might give you a hint that this girl might be local.
Yep.
Right.
Yeah, you say guy, but we say guys just as a norm in Texas.
This is they them. Is that what they say? Is that what the cool kids say? All right. So and then I want to talk about the housing market stats. They just came out. Nobody's guessing who this guest is yet. Guess who the guest is. I can't bring the guest on until somebody guesses. Jeez, here, I'll guess.
Let's guess.
Here's my guess. Robert Downey Jr.
Good. That's a good guess.
Is it good?
I don't think that's it. That's a good guess.
The Hulk. Man, at least I'm guessing. Jeez, this is
Captain America. Like, are you just going through the Marvel cast?
Is it
Lucky Barnes, man?
Maybe. Hey, but did you see the news today? I was right. November, the first negative year-over-year number for Austin came out, down 1%. The median for the MSA stayed flat year-over-year, literally flat year-over-year. I'll pull up that stat in a second.
You did say that it was going to be in November, and you said that 3 months back?
Yes, it's Celia Israel. She's coming on to say she didn't win, and Kirk Watson beat her. Sad, man. Oh, so sad for her. All right, so it's time. Since we finally got a guest, thank you, Thomas. Our guest is the one and only Kevin Knight, the Mullet Man. Welcome to the channel.
You guys are just so crazy. It's good to be here with you. I miss it. I really do. I miss our fireside chats.
I do miss our fireside chats. I miss all the times where we start talking about NFTs and stuff that I don't have no idea what you're talking about.
Yeah, well, that ship is sailed. Good thing that's not a topic anybody wants to discuss at the moment. So
not at the moment.
Not yet. Maybe sometime in the future.
Yeah.
But I'm happy to be back. Thank you. Thank you for the kind words as well. My mullet thanks you as well. Still here.
I don't believe you gotta flash it.
I don't it's here somewhere.
Mm-hmm.
Where we at?
Oh,
I feel like
I lost it. My camera's all messed up. I got a haircut yesterday, so.
Oh, it didn't add November's number on there for some reason. Here, let me show you the other one. All right, look. So here's the stats. Why doesn't it show that?
There it is.
Did it go? Let me try it again. Yeah, there's
There
that.
it is.
But for whatever reason, this doesn't have January on. All right. So here's the Austin numbers. So we finally dipped below last year's numbers.
Mm-hmm.
So the guess, I mean, what do you think is going to happen here? Do we? I don't know. Quick prediction. What do you think happens from here?
I don't know. It's scary to look at, if I'm being honest. But you guys have, I'm sure, felt this all year.
Well, I think the question is, do we think that the trend is going to continue down? I think it might. I think it might tip down one more, not at such a steep decline, though. Right?
Yeah, I agree. Actually, having no real reason to feel otherwise, I my gut tells me that that's right, Ian. I agree with you.
Well, yeah, I know. I mean, there's going to be a lot of people that are going to be saying, "Oh, all you realtors said all these things last year." But I mean, look, I did say
said all what things? Let's talk about that.
On this channel in particular. I mean, we kept saying that we didn't see the market coming down, and now we're ending so far.
No, we said there wasn't going to be a crash.
True.
Yeah.
Well, and it's also your definition of a crash. Oh, let me take my email off there.
I agree though that we did say we've been hedging this for a long time though, right? I mean, I know
you're talking about a small, like a downturn.
Like, yeah, we've known this since like a year ago. Like we started having these conversations a year ago, and we said like, hey, I don't see this changing if the buyer demand stays the way that it is. But the buyer demand, the buyer demand just stopped. It dropped off the face of the earth, unfortunately. So when that happens, you have no choice but to let prices come down.
And that's what I find interesting. I stopped paying attention to that one channel. In fact, I believe that person stops the channel completely. I don't know. But, if you look at a lot of the reasons why they said Austin was going to crash, I mean, they just kept saying it was too high, that, a lot of things, but never the fact that interest rates were going to hit 7% and really crater the market and inflation. So, I mean, you could say that person was right, but he also said it was going to crash 40%, and we're barely at 17.
I think 17, all things considered, is an absolute win. Am I wrong?
But if it drops down, like if it continues to downtrend just a little bit, what are we thinking? 20%?
25%? Okay.
25%.
Listen, I'm not trying to downplay that either. That sucks, right? Especially for people that maybe bought this spring probably, but
and need to move.
But they shouldn't. What is going on here? They shouldn't be
just
doing
ones that need to move.
They shouldn't be though. I mean, like, I mean, I get it. If you're relocating, that's another thing. But if it's voluntary move, then I still don't recommend selling the house.
Can we adjust, or can we address Chris the comment?
Let's see. Y'all said with the amount of jobs and people moving here that you didn't see houses going down. So good to be honest. I mean, I've been honest about a lot of things about this market, but it's fair to say that, a year ago, as we were looking at the market, that all of us on this channel didn't say that. We all, thank you, Christian, appreciate it. We all, and I'm looking back at this, as a year ago, I was a little less bullish about this year. In fact, I think a lot of things I said, we're going to see probably back to the average, if not flat. I can't say that saying at 0%, I meant this being flat, but I can say that I expected us to be up 6 to 9%, maybe 12% on the high end. And we're seeing a lot lower than that. So look, it's not good that it came down this much. I mean, look, it depends on your situation. I mean, I keep seeing a lot of people that really, really wanted to buy homes and said, oh, it got too expensive. Now you have interest rates kind of coming down. I mean, here's what interest rates did today on the news of the Fed is they came back down a little bit more. Mm-hmm. So yeah, I mean, look, it's not good, but I'm looking at this from this standpoint. I was looking to buy more investment properties personally. You guys tell me if you were too. I was looking at buying more investment properties. When prices really hit into the 6s, I was like, man, this sucks. Like, I don't want to, I love buying homes in the mid 3s, low 3s that I can get a really good rental on. And it was hard, and it's been hard to find that. Now it still makes it, even though I could get something closer to the 3s again, it's still pretty hard to get a decent interest rate where it's still cash flows the same for me. Now, if you're sitting here as an investor and you're coming in like cash, I mean, I'd be writing offers all day. Just
am.
All right, 500,000, 355. Let's see what you want to do.
I got people doing that. Like somebody offered 280 on a house I'd listed for 425. Yep. And I wanted to punch them in the face, but I get it. I understand. If you have cash right now, you should be buying. Yes.
Yeah, that's a bit extreme. But I have an investor and I have a strategy, and we're just going boom, 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 hitting lots of houses is how I'll say it. What do you think about that particular comment, Kevin?
Which one?
The amount of jobs moving here, the same one. I want us to all talk to that one.
Yeah, but the jobs are still moving here. That's just like, if you think like Meta and a lot of these other large companies, they cut their workforce by 10 or 15%. I mean,
and the crazy part about that is only 222 were laid off in Austin.
Yeah.
Oh, really?
Yeah.
Wow. Yeah, but they also stopped. They also abandoned their entire lease at the 6th and Guadalupe building, which sucks. So like the jobs are still here, but just like everything else, everyone's kind of just in this weird like holding pattern. So that's why if this was more of a drastic, if it was a scary situation where that I didn't think we were going to crawl out of it very fast, because I think these jobs are going to come right back. The moment we have good news about the economy, everybody's just waiting for good news, and we're like looking at each other like, are you going to start buying? Because if you start buying, I'll start buying. And then once that happens, Bitcoin, Tesla stock, everything's just going to go through the roof. And then our housing, I believe, will pop back really fast, like 4 to 6 months.
What's interesting to me is that over the last 18 months or so, 20 months or so, clients that would reach out to us that were like, hey, I want to be under 400. It was like, okay. Yeah. And literally I would be like, all right, here's my buyer's agent, meet with my buyer's agent. Mm-hmm. And now I'm getting like Eileen, my wife, had literally in the last 2 days, 7 buyer appointments, six buyer appointments, and all of them were like under 500. And I'm like, normally when you sit down and you have a buyer appointment, you usually pop up to see what's available in the area that they're looking as you're talking to them. And I'm like popping up and I'm like, okay, well, we have like 75 homes we can go show you. Like, this is awesome. So I think it depends on the situation you're in. But here's what's a pretty interesting comment here is Power of Pickle. If you haven't been playing pickleball, I highly recommend it. But bought at the peak and not planning to sell soon. I literally just bought at the peak too. So for everybody, I did too. Bad, but I'm not going to sell. I mean, I'm going to
same. I agree with you, both of you. The holding pattern, that was an interesting phrasing right there, because I think, like you said, as soon as there's good news, you have the companies will start their hiring again. I think one thing that caused a little bit of a hiatus is we did have a lot of companies announcing they were going to start building and start doing bringing buildings here, and then they paused. They halted or they moved. What was it? Micron is a great example of that.
Yeah. Mm-hmm.
Right. We had so much stock in that, and then where that ends.
Was that the Lockhart one you're talking about, or a different one? Yeah, because then that one imploded.
I mean, that's a big one. And then so the Samsung, like that isn't going anywhere yet, right?
Yeah, but all these things will happen. They're going to happen eventually.
It will, but they're delayed, and so that delay is causing the same delay, like the lagging effect in the housing itself.
Yeah.
You don't need people if we don't have the jobs for the people that can cover the cost of living.
As you guys are talking, let me pull up and see what the unemployment rate is. And I don't know if they've come up with a new one, but that's one thing too. It's like interesting to see, even though we're having layoffs, that hasn't gone up. And I know a lot of, like, if you read the news, I love the headlines right now. These BS headlines are ridiculous. Like Realtor.com puts out this headline, oh, massive increase in foreclosures. If you read the article, literally right in the very middle of the article, it literally says that we should probably tell you the fact that there was more foreclosures because there wasn't foreclosures, and really these numbers are still below pre-pandemic levels. Mm-hmm. In the very middle of the article, I'm like, are you freaking kidding me? Mm-hmm. Like, why don't you just change the headline? We want to write something scary, but there are some foreclosures, and you're not going to see them until probably end of 2024 or end of 2023.
Yeah, I mean, I mean, if you believe all the weird stuff that I believe, this is the fourth turning, right? This
You
is the
think
fourth,
what?
This is the fourth turning. Are you familiar with that? Have I talked about that before?
Spit it
So,
out.
Like that.
As of October, sorry to cut you off. Keep going, but
No, you're fine.
as of October, for 3 months straight, we're at 2.7% in unemployment. So it's flat.
Mm-hmm.
All right, go ahead. So the fourth turning.
The Fourth Turning was a book written by Neil Strauss, like in the late '90s, and they look back at the cycles that our civilization, specifically like the North American civilization, like Western, and it runs in 80-year cycles. So there's always like a 20-year like build up Renaissance cycle. Anyways, we're in it goes 20 years, 20 years, 20 years, like a basketball game. First quarter, second quarter, third quarter, fourth quarter. Fourth quarter is like the distress, the destruction, the tearing down. That's where we're at right now. And theoretically that ends in like the next few years. And then like 27, 28 is the start of the new turning, the new 80-year cycle in our civilization. So it seems to be fitting nicely into that time frame. And so it looks like that, if I'm being honest, that's probably going to be the next big full big upswing in economic growth.
So when you said a few years, what does that mean if we're tracking 5 years, 4 years?
Well, I mean, look at
gradual up until then.
But. Yeah, well, I think it's capitulation actually till then, if I'm being honest. Like if you look at like the last market crash 2008 and 2009, that did not well, Austin wasn't greatly affected during that time, but it was affected a little bit. But generally our economy capitulated a bit during that time and didn't like immediately rise out of it. So it took a few years.
So that's actually that's a point I wanted to ask you, Jeremy and Kevin. So 2008, Austin wasn't affected very much. Obviously we're in this situation right now where Austin, we absorbed it pretty well, but now that our prices are so much higher, do you think if there was another spike, do you think it'd be as?
I mean, I think you're seeing why you're seeing such a big drop right now. Because we've talked about this during the last crash. They only saw a 17% drop.
Right.
We're at, 12% drop. We're at 17% right now. I know we didn't really throw out hard numbers, but I think in the middle of next year we will probably be down 20%.
Yep.
20% overall. If you actually look at year over year, we'll be 20%. But then we're going to end up the year next year. So right now, what are we at? 530. I guarantee you by the end of next. Well, sorry, I don't want to say guarantee. My estimation is it will end next year around 550.
Yeah.
End of next year, 550. Huh.
If you look at like if you let the market balance itself out in terms of median income, interest rates, and price of the home, like what generally people like their sentiment, what they feel is like affordable or reasonable for them to do this on a consistent basis. Really, the interest rates have to be between 5 and 6% for people to feel okay with that. It's like, hey, we're not going to get super low, but we're not feeling like this is like historically high. Price, I think, for a home in Austin needs to be under 600, between like you said, 550, and then houses in the suburbs, I think, have to be consistently between 4 and 450. And I think if you see that, I think consistently over years, I think you'll just see strong, steady 3 to 4% growth of prices in Austin again, like we were saying before.
See, I still think that the interest rate is only a factor for the people that have been in the market the last few years, or more the people that have been in the market the last few years, especially.
I don't know if I disagree with it. My thought is like it's more like a mental barrier to it that it hasn't been like that in most people's lifetimes.
Right.
You know, and so
typically within their lifetime of purchasing properties.
Yeah.
Right.
Yeah. So even if it's like probably 6 or whatever, they're probably not going to bat an eye and be like, but I think generally if rates hover between 5 and 6% for a while.
Yeah. And I'm saying the person who's, 24, getting out of college, has a good job, going to buy their house going to look at real estate for the first time, first time ever right now, pregnant, 3 months pregnant, wants to get into a house. They shouldn't like the reality is, are they going to avoid buying the house because of interest rates today?
Yeah. I mean, I didn't hesitate. I didn't even know.
Yeah, that.
Right.
You didn't even know is where I'm going with it. And that's the largest portion of purchasers.
Yeah. My first rate was 2005. I had 6.5%. That was my mortgage.
And you didn't know, you didn't care. You just said, what does it take for me to do this?
Yeah. But
we're
also,
not talking investors here, right? We're not talking move up buyers.
My house was $83,000 though.
Sure. But I was listening to a lot of things about, everybody was like, yeah, but we made more money back, or there was more money relative to the price that we were paying for houses, but that's actually not a true stat, depending on who you ask and the information you're looking at. It's
crazy. Now that I'm thinking back at it, like I only made like $62,000 a year, I think, during that time as an engineer. But then my house was $83,000.
Sure.
Bro.
Sure.
And on my income, we were not like crushing it. Like, my mortgage was only like $850, $900 a month, but we still didn't have a ton of money going forward. But
I think a lot of that though, it's all the ancillary costs, right? Like your property taxes also inflate, and just standard cost of living. I don't think it was the houses. I don't think people really made much more than.
I sure as hell wasn't paying $6 for a gordita crunch. What the hell is that?
That's exactly it. Yeah, it's all the other stuff, all the ancillary.
$6 now for a gordita crunch at Taco Bell. You can miss me with that.
Miss me with that. Say less, Taco Bell.
$7.50 if you get it with steak. You're out of your mind, Taco Bell.
Yeah.
Yeah, I mean, Christian, if I'm reading what you're saying here, if I'm reading this correctly, if interest rates hit 7 to 8% by spring, people's homes will have to be significantly cheaper in order to be sold. Yeah, or people are going to have to make more. So the challenge you run into right now is that. So if you think about how the system works, right, with the Fed increasing the Fed funds rate, what that really does is it's the lending back and forth between banks. So like if companies are borrowing money to make payroll and things like that, now it's going to make it harder because now they're paying larger interest on that. So that's where we're seeing a lot of these layoffs, right? And look, it's good that a lot of these companies are cutting the fat. We had this big boom and that people were overhiring and paying pork, and now they have to cut the fat. So I think, you're going to see some of these people take jobs that are more fitting for their and here's another thing. During COVID, people got used to not having to work as hard and work from home. Maybe not work as hard as is the right term, but they were a lot more picky about where they were working and how they were.
There's a lot more flexibility.
Spend more time doing personal things. Maybe I guess that's so now they're going to have to go back to maybe working jobs that they don't want to work anymore. Right.
Yeah, I think that's a conversation. We've talked about that a lot. Exhausted that one, I think.
Yeah. So, all right. So we're talking, one thing oh God, I had another question for you. So I've heard a lot of people saying, I'm okay with prices going down because next year I'll be able to get my property taxes lower.
Mm-hmm. Mm-hmm.
I don't think we've had your comment on that yet, Kevin. I think that they'll do one of two things. They will just increase the property taxes back up to make up for lost revenue. Let's say if you say, okay, my home is actually worth less, then they're just going to raise the interest rates more, or the rates more, tax rates more. So they actually just keep making the same amount of money.
Yeah. Actually, that's something that's really irritated me in the last few years, where I feel like having the tax rate, like the millage rate for your county, stayed pretty consistent. And now I see these new developments like in Leander and all these other outlying areas. They've carried the millage rate out to 4 or 5 decimals, which is an old, retail packaging trick, like that people won't notice if you change it a little bit.
It was office space.
Yeah. They won't notice that you moved it a little bit, and they're like, well, it's close enough. So it's a way for them to creep up, but they've been reevaluating. Like just City of Jonestown just did well, school needs more money, so we're just going to increase the millage rate again. I'm like, whoa. These are supposed to be some more consistent things where if property values are up 30 or 40%, and then you're also increasing the millage rate, it starts a dangerous precedent of like you said, the county can just decide we're going to do whatever we want to make sure that our budget is hit now, whether that if home prices go down, we'll increase your millage rate because we need the same money that we were operating on before. And it's a slippery slope because they've even said that they're operating in surplus because of what's happening right now, which is why the state of Texas last year, they started mentioning generally lowering millage rates across the state to account for the fact that the income growth for the counties had grown so faster than the budget required. And it was, kind of unfair to the homeowners there that their taxes had gone up so much. But I think it's a slippery slope, because once you get used to that money and then you build it into the budget, the county doesn't want to have less. It's the same thing that's happening, like I said, in retail packaging and commercial services. It's not inflation. It's that these companies were able to charge more money for their products and services. And then when the supply chain caught back up to itself, they're like, well, now we're making 55% gross profit per sale. Why would we change that? The consumer's paying that. Like, why wouldn't we just keep that going? So I think the same thing will happen with housing.
So we're basically saying the same thing.
Yeah, I agree.
You're not going to see a reduction in what you
No,
think.
I don't think that you'll. I think again, this is an. I've said this for a while. This is an inflection point for a lot of things in our economy, in our world, and in our economy. And this for me is like the start of the widening of the gap between the uber wealthy and then everyone else in this and like middle class. So middle class used to have a very powerful, very populous and very powerful subset of the country. And they've widened the gap between that and the ultra wealthy, where they know that they can make more money off of the middle class than off of the lower classes, because middle class people will pay higher margins for goods and services without batting an eye. And why wouldn't they? I mean, you become a revenue stream for your government and for everybody else. Every time I get on here, we end up talking about my crazy back end conspiracies.
I mean, I'm fine with it. Ian's fine with it.
Yeah, I think
I just feel bad. I don't want to. I like say anything.
Why would you feel bad? I think it's something that a lot of people think about. Yeah. Or want to think about, and they hear about, and they're like, okay, well.
I guess like the tough part about like what we do right now is, anytime we say anything against the going theory, right? If there's a lot of people that really want the market to crash because of a lot of reasons. Prices are higher, interest rates are higher, they're paying more at the pump, they're paying more for bacon. Like, they want a crash. They want to bring down the system, and not to, get political, but I think that's why we saw a president that we probably have never seen, is because people got tired of the status quo, right? And so anytime that we sit here and go, okay, well, it's not going to be as bad as people think it is, people get mad. And in the comments I've seen on these channels, like, if we say, hey, look, interest rates aren't going to go up to 10%, like Patrick Big David says, oh, well, you're crazy. You're just a realtor trying to sell people stuff. Well, I don't know. I mean, I'm looking at things. I'm seeing the same things you're seeing. I just don't see them as crazy as you do. Yeah, I'm a realtor, but I'm also one of those people who's trying to buy properties. I mean, Ian and I talked about investment strategies to buy properties the other day in this market with our clients and with us. So it's interesting to see. I just don't think it's going to be as crazy as people think it is. I think the recession will definitely and that's, again, we always get into these loops where, especially the last 3 years, okay, everything's going to foreclose because nobody can work right now because of COVID. And then what happened? A moratorium passes and nobody forecloses. Okay, the market's going to crash because nobody wants to buy homes because of this. And then what happens? Everybody goes out and buys homes. So I feel like, and then again, here we are. The market's so hot, it's not going to crash, and then it drops 7%, and we're sitting here going, well, crap. Like, so I think there's so many things that are happening. Even at the beginning of the year, I mean, this wild prediction, and it almost came true. And I actually didn't even air the footage because it was kind of very controversial. But one of the things I said is that, and this was back in like January of last year, I said there's going to be something really crazy happen, maybe not the level of COVID, but something really crazy is going to happen. And then I literally said by March, and then around that March, April timeframe is when we had the Ukraine war start. So so there's going to be something crazy that happens. There's going to be something that we weren't predicting. And then just the debt ceiling is going to just keep getting extended at some point. Well,
it sucks. Oh, you see I was going to show you my new jacket. Check out the new jacket.
Oh, nice. Elvis.
The part that is interesting to all this is that, actually, I've said this for a while, that we have the greatest the greatest financial minds in the world as our
Thank you, Christian.
Are the people guiding the economics of the country, supposedly. Like, these are people that went to prestigious Ivy League business schools, deeply studied economics. This economics is not complicated. It's complicated in terms of that there's a lot of levers to pull, but these guys know how and when to pull specific levers. And when you have those people, then you have the most educated psychologists and predictors of human behavior working alongside of those people. They know if they do certain things in the economy that people will react a specific way, because they do. They treat us as a subset, not as individuals. So previous, like 2008, the market crashed. The bottom came completely out of that. It went down to astronomically low levels and then grew pretty well after that. But the difference was, at that time, the media channels were all central media channels. Like, social media did not it's just starting to exist. So the ability for us to share what's going on and share that information wasn't as strong as it is today. So when you have they want the economic downturn to happen because volatility creates opportunity, right? But now that retail investors, you and me, we can trade stocks, we can disrupt markets, we know information, we can share it almost immediately. You have to be more psychological with that. So you can't dump a market and then bring your institutional money back in and scoop up all these assets, because you and I are smart enough to get in at the same time that those guys are getting in right now, right? So you have to create these opportunities where you have these bear traps and other things that are happening to make you think that you're getting money out of this or whatever, but they drag this out. So all that long story to say is, intentionally raising, like, they raised the interest rates to crash this market in a way that allowed them to still make more money. They literally have destroyed a much larger market than they're trying to save by guiding inflation down for products and services. And like I said, inflation for products and services hasn't really come down either, you know, relative to the supply chain being flushed out. So they destroyed the housing market for the sake of being able to do that. That's why there's no way in my mind that they don't know what they're doing. They know exactly what they're doing. And when they say that we're going to have a recession, they're not guessing. They're telling you that this isn't over yet. We're going to mess with you for a little bit longer. So I know that's really long-winded, guys, but I haven't been on here for a long time.
No, we were going to talk about popcorn items, but okay. I mean, let's get into the meat and potatoes. No, man. Here's the thing: is like, you know what? I got to be honest with you, and I'm sure like people on this channel might be getting tired of the stale content. It's the same thing reverberated, and that's why we try to keep it fresh and talk about different topics. But sometimes like stuff like this is just kind of too good to pass up, and that's why I wanted to bring you back on here, especially when I saw that guy with the mullet. I was like, God, I got to get this guy back.
To answer Carlos's question, yeah, they dropped median rent, lease prices. I was looking that up while you were monologuing, Kevin, I think. No, I loved it. But dropped about what looks like about 10% from November to December, just to answer the question.
Nice.
Single family.
Which also sucks.
Yeah. Single family rent.
That's not a good thing either.
No, it's not.
No.
Wow. All right. So let's talk about.
But it's also December, right? So.
Yeah.
I stopped looking at the comments for 1 minute. Let's see what we got here. Did you guys see? Yep, you answered that. I love the guy who is saying that the Fed is smart. It's the same one investing in crypto because they think fiat is trash.
No, I don't invest in crypto because I think fiat is trash. I invest in that market because the
risk is high.
The risk is high, but it's not just I think that they haven't picked up. This is part of that plan. You have to slowly ease in people into that. Our country, every country in the world wants digital currency. Like, it's going to happen. So you either I'm getting on board with that concept early on, but yeah, I think there's some dumb people in those positions that I might not like, but they're not dumb as a general. They're very intelligent people. They know what they're trying to accomplish. So they're not surprised by behavior. No.
Yeah, I'm with you. I think we're just extreme early adopters in things that have the potential to be world changing.
It's just like anything else. Like go back 100 years, 200 years. The things that were banned weren't banned because they were bad. They were banned because our government couldn't figure out how to make money off of them. And then when they figure out how to make money off of it, they become part of the normal everyday life.
Remember those old movies and they were talking about like the discovery of the ability to sell water. And now you look at how many people are. I got to get my Avery on. Yeah.
So the question about the ABOR stats I thought was pretty good too, because I don't think the November stats are actually quite outdated as you think, but I mean, they are 30 days old at this point.
Yeah.
But I mean, that was a snapshot of 30 days ago pretty much. But what's interesting about this is that inventory has come down. And this is something, if you saw the reel I put out today, inventory has dropped. I mean, we were the month before was like 3.1. If you look at, if you actually look at the MSA came down like 0.01, because I think it was like 3.2 months inventory. So inventory in our MLS has come down. And that's why, like the question earlier was like, who's going to be insulated? I think Austin will be more insulated. And Kevin keeps saying this a lot. So and I agree with him there. But if you look at this, days on market's gone up, but inventory's really gone down. And this is a really, really important thing to talk about here. Because Kevin, you were on here back in January, and what were we talking and what were we most surprised about in January?
Is this a trick question?
No.
Because I don't remember.
Oh, well, it pertained to inventory, that there was no inventory.
Oh, yeah. There was like 700 homes or something like that.
It was stupid. And what's interesting is, think about it like this way. If we were going to end the year at 0, right? Like as far as like year-over-year growth, can you imagine all of this inventory that's finally here, been pushed out and leveled out to over an entire year? You would have not seen that big, massive, it went from, I mean, look, I have it right here. You would not have seen this big, just massive increase in our market. Where am I at, man? It's running this stuff so hard sometimes.
Everything's momentum based too. Yeah, go ahead.
I mean, look at this. We started the year at 550 and went to 667, $100,000 in 1, 2, 3, 4 months. I mean, literally, if you would have bought your house in December and then sold it in early May, you would have made $100,000 just for blinking an eye.
Yeah.
So but if we would have just done this entire year, I mean, look at 2019. 2019 is a prime example. We had a pretty consistent inventory all year. And look, we went up 60,000. No, more than that, 70,000. That's still not as high as what we saw, but damn, 70,000 is a pretty big jump too. And then it flattened out. So it's just interesting. We're looking at winter. I think Aaron's talking about winter, but we are in the middle of winter. It did get slower. So it's interesting. But we're going to start my whole point was we're going to start the year with a hell of a lot more inventory, and all the inventory that didn't sell is going to just come back on the market in March. So I think we're going to have a much flatter year overall.
For sure.
His next comment kind of addresses that. The summer will tell us a lot more. I think he's right in that we have a whole season of being outside of pandemic era shortage of supply chain information or supply chain.
The thing that really drives me nuts, and maybe you would disagree with me, Kevin. I'm curious to see what you hear.
It's like challenge accepted.
It's that hair. That mullet, it drives me crazy. But it's this. I hear from so many industry professionals, realtors, lenders, title companies, smart people, dumb people, all these people that we're down or we're short so many homes. We don't have enough inventory to keep up with demand. We still need to build more homes. I hear you, but isn't it that we're out of an inventory of affordable homes for people that need to buy affordable homes?
Yeah. I mean,
Is that the case?
Yeah. Think of like the Dripping Springs market 5 years ago. Like think of that market 5 years ago. There were houses that were like the median price up there was starting to get like $450, almost $500 for a while just in Dripping Springs. And that was much higher. That was $150,000 more than the rest of the MSA, like Round Rock or whatever. So you're clamoring at that time, like build more houses, but build 300 and $350,000 houses. And the builders would look at this and be like, same dirt. I can sell a $600,000 house. No, I'm going to go ahead and build a $600,000 house as well. So those guys are the ones that, again, say what you want. I'm always like a big believer, invest in, buy a home as close to the city center as possible, right? Because it contracts and moves out from the city center. But maybe a great example is Kyle, right? Like, start looking at Kyle and they're offering like $750,000, $800,000 houses in a market that really just needs to be selling $350,000 to $650,000. I mean, even 600 is fine there, but because that's still within a reasonable range for people, even if you want a really, really nice place. Well, I mean, come on. Like,
well, the growth will catch up to the valuation, right?
No, I mean, anybody that has a reasonable, even if you make $150,000, $200,000 a year, a $600,000 house is a reasonably budgeted, although expensive. I get it. Don't get me wrong. It's a reasonably budgeted house for what you make. More than that, it will stretch you a little bit thin. So, I mean, I don't think the builders are building what people want.
Right. But my point there is that it's also a corridor, a growth corridor, right? So eventually there's going to be so many people that becomes kind of the next, what you ring around nearest to city center.
Well, it's the lag and effect of these factors, right? So like the lag and effect of what you saw this year is that we had a huge price spike in the spring. So people that had waited all last year to sell their house and regretted it, they saw this huge price spike in the spring. They spent a month talking to their realtor. They spent a month getting the home ready. They put their house on the market for the price that they thought it was going to be in February. And they put it on that in July. And that didn't get that price because buyer demand dropped off because of interest rates, right? So like, but then the lag was you still have people listing in July and August and September thinking they're going to get what they were going to get in March, and they're not. So then those people start pulling them off. Well, during that same time, the builders were expecting to get that. They overbuilt their inventory. And now here we are at the end of the year, them offering 7% commissions on houses and dropping prices by 150. So the reality is, until they get their overshot of inventory out, I think it's going to be a minute before the general market prices stabilize again. Like they'll get their inventory out, then Joe Seller will come back onto the market in the spring. Once those things start to even out, and those will only happen, I believe, when they stop changing interest rates every 30 days. Like when people can look at the market and say, okay, I can plan for 60 days from now, and I think I'm still probably going to get a 6% or 5.5% interest rate. Cool. Let's go back in the market because I need to make a decision. Those three things together, I think, is what stabilizes this market next year.
What? Say the three things again.
The builders getting rid of all their crazy overpriced excess inventory that they built last year, or they planned for last year. The sellers that were like that thought they were going to get mega prices for their houses. Reality has set in for them. So their realtor is going to be encouraging them to list at a current listed price in January on.
When a quarter or half of the realtors are gone.
Yes, when they've been kicked out of the market because they're not making any money anymore, and we're back to what it was before. And then interest rates stop
and interest rates
oscillating between 5 and 8% every month. If we have 30 to 60 days where the interest rate stays between 5.5% and 6.5%, my opinion, if those three things happen and they happen by February or March, then we see evening out of the market. We see a lot of buyers that have waited this entire year to get back into the market. And I think you're going to see another pretty strong growth year after that. If those things happen, if they don't, then who knows what's going to happen at that point.
I mean, by then Russia will nuke everybody and we'll be done.
Oh, stop.
I'm just kidding.
Better go build my bunker.
Yeah. You know what's interesting is I'm listening to you talk sense, Kevin. And you and I were talking pre-show because Ian was late. I'm just kidding.
I'm in Nashville still.
Ian and I were just in Nashville. I came home because we had Platinum Top 50 awards, which we won Platinum Top 50. Thank you. In fact, actually, thank all of you for all reaching out to us, working with us, supporting the channel. Getting the award Platinum Top 50 Realtors is kind of a special thing because they only give it out to 50 in Austin. So I appreciate that. But with the comment that as I'm walking through today, I'm walking through with a big smile on my face. And this is before the awards announcement. This is when people are trying to find tables. And I'm just like surveying the room. And in fact, you know, Ian and I were just in Dallas at Tom Ferry. Ian was on stage at Tom Ferry talking about some cool stuff that he does. So Tom Ferry is an organization that is like a training organization for realtors. So we both actually were on stage and talked. But Ian, I was happy to see you up there.
Thanks,
the thing that I noticed, and tell me if I'm wrong, Ian, because you were there and I was at this event. I'm surveying the room, and at Tom Ferry, there's a lot of excitement because you're training and learning, but I'm looking and surveying the room, and I'm looking at agents in the face.
Yes.
And I just felt fear.
Oh, yeah. Oh, my gosh. Yeah. Deer in headlights. There's so many real estate agents that have either started within the last 2 years, last 18 months, or they've been in the business a very long time. And both parties are very, very, very scared of what's next.
And, you know, it's interesting. So, you know, we're at this training event and you have these people talking about how important it is to buckle down and really dive in and go back to the basics. I'm sitting here and we're talking about all of the amount of delisting homes. I'm seeing all these homes delisting. And in my mind, I'm seeing dollar signs. Because I know all of those sellers at a certain point are going to probably call me, you, or Kevin, and they're going to be like, hey, look, we see you guys do this stuff. We know you get the reach. We need to get this house sold. We're more realistic now. You know, I've hired agents on my team to go out and call expireds withdrawals because they're going to be more realistic starting next year. So it's interesting that there's so many agents out there that will be out of the business next year because they're allowing what?
I was going to say, or the people that were trying to sell thinking they could sell their home on their own and save the commission. That's a big one. Big one.
But there will be a cleansing of this. All of those, for lack of a better word, COVID baby realtors are going to get hit. All of those realtors that have been sitting at their end of life, right? Not like dying, but like they've been in real estate for 20 years and they're just done. They're going to be out.
It's hard for everybody. Yeah. It's hard for agents, you know, that have decent sized businesses and an infrastructure and overhead built on that.
Let's take this note right now. 19,800 MLS members in Austin. All right. January. What are your predictions? Because this is when our MLS fees are all due.
Oh yeah.
No, I think one of the buyer's agents on my team that we just parted ways with, his was coming up, I think, the end of January. But is it December 31st they're due or
December
January
31st?
What? Which day are they due?
December 31st.
Oh, okay. So he's yeah.
But his license may renew at the end of January.
Oh, that makes sense. Yeah. I'm interested. Do you think I should pay my dues?
That would be a good idea.
You won an award. You're fine. Don't pay anything.
Yeah, but I mean, think about it. Like that award is for last year's work. It's not for next year's work.
That's true. It's
I mean, I think everybody's just trying to figure out what to do as we go along, and you know, being somber about it is okay right now, and maybe they're not scared. Maybe people are just like somber about it, and they're like, hey, we really don't have a lot to celebrate this year because it was just kind of like keeping your head above water. For a lot of people, like, I'm not trying to act like we had it rougher than like there are people that lost jobs and everything else, and it's unfortunate. So, but
no, the big sentiment in the room is many realtors had no clue what they were doing. That's the flat truth. Yeah. Right. But they were able to float, no problem, because everyone was high. Everybody was high on the opportunity.
Well, everybody, I think, at the Tom Ferry thing was high. There's a lot of jokes floating around there.
That's funny.
Yeah, but that's interesting.
Prediction: how many agents in?
So for we're just under 20,000. I bet you'll see a quarter leave. We'll be down like.
I'm thinking 15%. I was going to be more aggressive early on, but I think what happens is a lot of them will still have enough cash to be able to cover this this MLS. Payment and then the next MLS payment, and then they'll drop out.
Is that active and inactive, or is that just active?
No. That is just active. Now, obviously, keeping in mind, there's only a quarter of those people that are actually producing at more than one sale per year anyway, right?
Yeah.
So, but I still think 15% is going to lose their, or just let their license expire.
For sure. I would guess at least that many were probably let go of by large teams as buyers agents.
That was, so I'm sitting here talking to Ian and I were in a very private group.
Yeah.
Of
you got to explain who was in this group, not the people.
We're
but
not allowed to say who's in this group.
Oh, not the people. Not the people.
We're talking like people that are doing $500 million a year in real estate. Wow. And we're sitting there talking to them. They're like, yeah, we just let 10 agents go. Yeah, we just let these agents go.
Can you imagine that? We just let 10 agents go in our market.
Yeah, I mean, the thing is, we're sitting here with like big mega producers. And here is the difference between, Ian, tell me if I'm wrong. The difference between the people in that room, we're talking there was 20 high industry agents in this room, right? I mean, we didn't send
20 of the highest across the country.
What was the sentiment in that room versus the sentiment walking around the other room?
Almost exactly the opposite.
100%. You're talking the best people in the industry were like frothing at the mouth because they know what's going to happen.
For sure.
It was night and day difference. There was excitement in there.
Yeah.
They were sharing. Okay, I'm doing this. You guys should do this.
Yeah, comparing.
Well, we're ready to triple down on this. That was a big opportunity.
Our marketing budget for this is 20 grand a month. We're going to 40 grand a month. We're going to take over. We're going to knock out all of our competitors. So, I mean, just night and day difference walking around the team.
Oh, I don't disagree. I mean, I think you guys feel the same way too. This is why you're here. You're doing this show consistently.
Week before Christmas. Wait, okay, a little more than a week, but whatever.
I mean, and I'm doing the same thing. I'm investing more in the infrastructure of my business now than I've ever done before. Because Aaron is right. We're going to come out when it happens, whether it's January or 2024, August. We're going to come out of this as the absolute rocket ships. And people are going to already look at us and say, these are the guys that I want to work with because they never left. And there's loyalty to that. There's a lot to be said for when they still see your name in times are shitty and they still see your name. You're loyal to the fact that you knew, hey, it's not great, but I'm still here and I'm still working.
Not just your name, but like your resolve, your tenacity while it's crappy,
Yeah.
And crappy, obviously relative, but seeing you work hard and diligently to accomplish what you need to accomplish. It's interesting.
I'm not going anywhere.
Right.
I mean, I was telling you, Ian, a little bit, and like to answer like what Aaron said earlier about the crypto market. Obviously, I'm not selling virtual properties right now. That ship is been our industry in that term was set back 3 years.
But are you buying them?
Not yet. Because
that's what I'm waiting for. I'm like, ooh, when should I pull the trigger on?
But there will be a time again. There will be a time. As much money as in that space, there will be a time again for those and NFTs.
They're on sale.
But what we are doing, I'm going full force into, is blockchain recording of real estate data. I'm working closely with other guys that are really, really doing good things in the industry in that regard. And they're so underground right now. And like the work that we're doing, the work that they're doing, I believe that's kind of stuff like 2, 3, 4 years from now is going to take off like a rocket ship. So once this economy, and same with you guys, anybody that's investing right now, I think I'm feeling the same way too. Like if I have some cash available, I'm like, oof, I gotta get a plan together, because like, when do you buy Tesla again? When do you buy these companies that are all at a discount right now that you're going to look back 5 years from now and be like, wow, why didn't I take advantage of these opportunities?
Yeah,
I did the same thing.
That's the cycle of financial life, right?
I remember looking at 2008, 2009, bro. I did everything I could with the money that I had, but I'm talking Apple, $40 a share, Caterpillar, $25 a share, like crazy stuff. And people then were even scared, like, oh, what if it goes to zero? It's like, you couldn't have lost. Anyways, rambling.
Well, all right. So let's talk about this then. Let's talk about the Airbnb thing. This is the only thing we'll get to today, because
this is the important one, though, right?
Yeah. Hey, Jaden, wait to the very end of the movie.
Yes, Dan.
Sorry, Jaden's my editor. Okay. short-term rental regulations, again, under scrutiny at city council. Is this the old one? Yes, no, it's the new one. So, okay, this other way. Austin elected officials are again setting their sights on the city's widely unregulated short-term rental market that would revive an issue made waves in 2016 that was tangled up in state courts. So basically what they're trying to do from all of this is they're saying they're not getting enough money from short-term rentals. It's really, really hard to get an Airbnb license right now to be fully licensed. You literally have to either be, I mean, here's the 3 ways to do it right here. It's down in this article. There's 3 ways to do it if you want to do it the right way and get licensed. So where is it at? Come on now.
Yeah. You mean to get approved for a new property.
Yeah. So, I mean, here's the thing that I'm not quite wrapping my brain around with this. They're saying there's 9,000 to 11,000 short-term rentals that are listed that are not licensed. So they're saying that they're not getting, again, Kevin was talking about this earlier. So they're basically not getting the tax revenue from this for the city. And partly to do with that is back in 2016, they put a ban on a lot of this it was STR2. So basically people that didn't live in a property, if you don't live in a property, you can't rent it out Airbnb. So they put up restrictions on this. And this is what got tangled up is the fact because they weren't back then they were saying is because there's a lot of unruly people causing problems. But the reality is that the city wanted to make money off of it. And even one of the last, what's her name, Vanessa something or other, city council was like, oh, there's a lot of money that could be going to the arts and to these things and to these things that aren't getting paid. So the reality of this just comes down that they want more tax revenue coming in. But what I don't understand is why they don't just license more of these. Like if you want the tax revenue, you just license them. Wouldn't that make sense to you?
Yeah, they want more people to have homes, right? Like that's the rationale behind it. That's the rationale.
Yeah.
It's pandering is what it is. It's pandering to the homeowner in the neighborhood to say, we want you to not have to worry about your home next door being rented out all the time. So they value, I think, more than the revenue from they value the loyalty of the homeowner to the political party. If I'm being honest, is what it is.
Right. I mean, here's what Vanessa Fuentes said. Every single day, the city is losing out on thousands of dollars that go to support the cultural arts, our music community, and the historic preservation of projects. So while you're saying that it's one thing, our city council is saying the exact opposite. Kevin, our city council saying we want more money. I mean, that's exactly what she's saying here.
Well, but she's saying that they're in a housing crisis right now and they need to ensure the housing goes to those that need it.
Right.
Right.
That's why
any operations, the status quo could result in significant changes for property investors in the city in the midst of an affordable housing crisis, as well as the technology companies that build short-term rental platforms. So yeah.
And then even then it'll kill arbitrage, right? Real estate rental arbitrage, which is a huge moneymaker where people they find homes that are leased that they don't own. They lease them from the landlord and then they put them on Airbnb and they arbitrage the difference. And this is not like this is a massive industry. That industry alone is a massive industry. So it'll kill that.
But isn't that mostly apartment complexes and condos and smaller units? Or is that impacting single family standalone properties a lot?
Well, I also feel like it's again, this is protecting bigger money developers of short-term rental properties, meaning hotels and stuff like that. It's the same thing that the taxi cab companies did when Uber first started. They wanted to regulate it away because they're like, well, they're going to steal revenue from us, and that's more centralized revenue. It wasn't because it was any worse or less of a thing. But I agree with you, Jeremy. I think this is the equivalent of strict parenting, where I believe wholeheartedly that the more restrictions you put on somebody, the more likely they're going to rebel against it, and the less value. I mean, I'm with you. Open this up, hey, you want a short-term rental permit? Boom, go ahead. We'll give you 90 days. Anybody that wants to put in an application for a short-term rental permit, you get one, right? You just got to go through the process.
Let's be honest. The city of Austin doesn't have the infrastructure to do that as well.
What?
But one thing,
The
if let's say 9,000 people all applied for applications tomorrow and all became compliant, let me explain to you how this works. So here's the math behind this. If they would open it up to allow these 9,000, because there's only 3 ways to get licensed right now. One, you have to actually live in the property. I was trying to pull it up, but I got frustrated. One is to live in the property. 2, you live in a commercial area. And then 3, I forget, it was like a hybrid thing, but it was not that you couldn't, there was nothing that you could just rent it out Airbnb to the city. But let's say they take 9,000 of those. It was $715 or something to that effect just to get a license.
Mm-hmm. And then $450.
$6.5 million the city could take in revenue if they just approve these.
Not to mention the fact that they could actually treat these like lodging, and they could actually charge an additional tax for lodging to every rental that comes through the Airbnb platforms.
Hold on. So let's hear the math. So you're correct. Yes, you are correct. So to re-up, let's say 9,000 people all paid to have their Airbnbs right now be legit. We're talking $6.5 million at the bottom line. Secondly, if they renew, it's $450 something. You're talking another $4 million a year in revenue.
Annually, yeah.
Annual revenue. And that's not new people. That's just the 9,000 that they're saying are illegal.
Mm-hmm.
So you're talking $10 million over 2 years off of what they say is illegal right now if all of them did that. And there's going to be others that aren't going to do that. So why wouldn't they just figure out a way to make it, figure out a way to police it better? For $6 million, you could hire people to police it better.
Well, and then the state hotel occupancy tax rate is 6%. And then so the city can actually have one too.
We didn't even, it's
6%. It'd be probably 10% because the city can actually have a lodging tax as well. So they'd make 10% on all the rentals that came through every one of those 9,000 properties all year long anyway. But I think it's more like, again, it's protecting the homeowners, and it's more of a pandering thing to the homeowners to say that we're loyal to you, the homeowner, and we want people to live in the houses that are going to be here, and not let everybody just run rampant with short-term rentals. Personally, I think the short-term rental market's going to even itself out over time anyway. A lot of people that bought properties in these years, they're using them as Airbnbs, and demand is not going to stay. It can't stay as high as it has been in the past, and people saw that it was a downturn in that. But you could do like Atlanta. You saw what Atlanta was doing, right?
No, they did.
Okay, so Atlanta only allows you to have 2 properties that you can Airbnb, the one that you live in, and 1 additional property as an investment. Other than that, you cannot do any additional properties.
Turner wanted to come say hi to you, Ian.
So they just put a cap on it.
Yeah. Anybody but anybody can that wanted to. Like, you can Airbnb your house and 1 additional property, so you don't have people coming in and buying like 50 properties as Airbnbs. It really kept those investors out. So I think it keeps more of a city feel. But Airbnb also is now building in the rates with all the fees. So you see what the upfront fee is now. So I think that was one of the big things that was killing their demand for a while, but I think that will figure that out.
So that'd be interesting to see, though, if Austin did something like, okay, you have to be a Texas resident and have resident in Texas in order to have a second home that's an Airbnb in Austin. If that's the rules that they did, that would be interesting, because I actually have clients that are out of state that own Airbnbs. So then you'd have somebody literally buy a house just to say they lived in Texas in one house, just so they could buy a second house to rent out and then rent out both. And that
or you have the couples that are married but not married.
Yeah.
Buying. There's so much. Yeah.
But obviously there's workarounds to this system too, because people are exploiting it right now. They're all over the place. And I've seen, there's one down the street for one of my clients, and we went and looked at this property because it was for sale. This dude had like 30 violations in his mailbox for short-term renting the place. And the city wasn't going to shut him down. They're just like, don't do this anymore.
Yeah, he's like,
okay, fine, I won't do it. And then he just goes, shuts it anyway. He's renting rooms, not a brothel, a hostel. Wrong word.
Well,
maybe a brothel. I don't know.
Well, and part of this too is they're basically just saying they're going to start fining people. Is kind of what I'm guessing that they're doing. So if you think about it, like, okay, let's say they fine you. Let's say at the end of the year, your net profit off of doing an Airbnb is, I don't know, $7,000, right? And they charge you $1,000 a month or $100 a month in fees for violations. All right, that's $1,200. You're still plus $5,800.
Yeah.
You know, your net is still
Yeah.
$5,800.
Hey, Jeremy, I hate to dip, but I have to go pick up my son, unfortunately. No, I mean, not
All right.
unfortunately. I'm glad to go get my son, but
We're ending it there.
Oh my
We're
gosh.
at an hour. Thanks, man.
Yeah.
Any last words from you?
No, I'm just thankful to be here, guys. Thanks again for having me here. I always enjoy our time together. And no other last words.
Nice. If you want Kevin back, drop in the comment. Ian, go have fun in Nashville tonight. We'll see y'all.
Yeah, I'm gonna run around.
All right. See you guys later.
Next week.